Hello and welcome to NNC News. I am Meghna Govil Kohli. Today we'll start with the overview of the stock market. Last week on Friday, market bounced back after a fall of 3 consecutive days. The 30-share BSE Sensex climbed 109 points to close at 26,108 and the 50-share NSE Nifty rose 31 points to close at 7,780 after losing over 1% in the previous session. Recovery in the market was on account of rally in the global markets. Foreign investors were net sellers in Indian equities to the tune of 1,128 crores on Thursday. Equity benchmarks closed off days high ahead of Maharashtra and Haryana state election results that were announced on Sunday. Indices were directionless since the opening trade but gained strength in last hour of trade to jump as high as 249 points on the Sensex and to hit 7,800 level intraday on positive European cues before seeing some profit booking in late trade. Experts believe that this upmove is not sustainable amid concerns over global growth and consistent selling pressure from FIIs. The global factors will continue to have a significant impact on the market and any negative news may lead to lower rupee levels like 62 against the dollar. However, reducing inflation, lower commodity prices and expected reforms push remain significant tailwinds for the market. Meanwhile, the Indian rupee recovered sharply up 39 paisa to close at 61.44 a dollar after falling to 7-month low of 61.83 in previous session. Fresh selling of dollars by exporters and banks supported the rupee recovery. Asian currencies edged higher on encouraging US data on unemployment benefits and industrial output. Now let's speak about the global front. US stock index futures rose 1%. European shares surged on Friday after drop in US unemployment claims and comments on by the US Federal Reserve official allayed fears that the economy growth is slowing down. The CAC 40, DAX and FTSE were up 1 to 2% each. Asian markets, which had edged higher early on Friday on the back of robust US economic data, trimmed gains with shares in Japan witnessing a sell-off. The benchmark Nikkei ended 1.4% on the day, 5% for the week, its biggest weekly fall in last 6 months. Chinese shares ended 0.7% lower, while shares in Hong Kong ended 0.5% higher, and Straits Times gained 0.4%. Now let's talk about the stocks which were in news for last week. Last week on Friday, banks topped the buying list, with Bank Nifty rising 2.5% as top lenders State Bank of India, HDFC Bank, ICICI Bank rallied 2 to 3%, while housing finance company HDFC gained 1.7%. Axis Bank rose 2% ahead of results that announced post-market hours. The private sector lender met street expectations with second quarter net profit rising 18.3% year-on-year, led by higher other income and net interest income, but higher provision limited the profitability. NII jumped 20% with stable asset quality. Two-wheeler maker Hero MotoCorp rallied 3%, reporting a growth in Q2 profits led by other income. Zee Entertainment gained 3% after the company beat expectation on operational front. Larsen & Toubro, Behel, Mahindra & Mahindra, Cipla and Tata Power were the other prominent gainers with 2 to 3% upside. However, technology stocks saw huge selling pressure with CNX IT index falling 4%. It was a twin blow for the tech sector. TCS tanked nearly 9% after dollar revenue growth missed expectations. The company said softness in certain business may continue for 2 more quarters and that meeting FY14 growth will be difficult in FY15. The IT major reported nearly 6% drop in net profit at Rs 5,244 crores for the second quarter ended September 2014, compared with Rs 5,568 crores in the first quarter ended June 2014. Infosys and Wipro were also down by 1% each. HCL Technology also took a hard knock on similar growth, falling over 9%. Dollar revenue for Q1 came in lower than estimate at USD 1,433 million. HCL Tech also plunged 9% after it reported a lower than expected 2.1% sequential growth in net profit to Rs 1,173 crore for the quarter ended September 30, 2014. The net profit of the country's fourth largest software services firm also suffered due to salary hikes given in the last quarter. Sesa Sterlite, Hindalco, Tata Motors, Wipro and Jindal Steel, they fell from 1 to 2.8%. About 1,335 shares advanced, while 1,505 shares declined on the Bombay Stock Exchange on Friday. Reliance Industries ended 0.7% higher after the recent correction post its second quarter earning. Bharti Airtel gained 2% after it added 10.22 lakh users in September 2014 to take its subscriber base to 21.15 crores in the reported period. It has a market share of 27.98% at the end of September. Tata Steel, which had dropped nearly 4% in the previous session on the proposed sale of its long products business in Europe, rebounded to end 1.9% higher. In the broader market, the BSE mid-cap index ended up 0.3% and the small-cap index ended 0.3% lower. Market breadth ended weak with 1,497 losers and 1,337 gainers on the BSE. Now it's time for a small break. Please don't go away. We have a lot more coming in our show. Hi, welcome back, and let's move to the next segment. Now, stocks recommendations for next week. ICICI Bank. ICICI Bank is trading at 1,505. The target price is 1894, which is nearly an upside of 25%. Now, in the last 6 years, ICICI Bank has delivered a strong performance in this tough environment. It has increased its branch network from 1,388 branches in FY 2009 to 3,763 branches in 2015. The branch expansion, coupled with strong capital adequacy at 17.57%, will enable the bank to grow its loan and low-cost deposit. Given its retail franchise and wide branch network, the bank is poised to grow faster than the industry average of 17 to 18% in next few years. Besides, it offers a bouquet of financial services such as broking and insurance. In most of the service category, ICICI Bank rank among the top 3 in the industry. Its profit is likely to grow up by 80% in the next 3 years. With 20% overall growth with improved margins on the back of correction of interest rate and better asset quality, ICICI Bank is likely to be rewarded with better valuation multiples. My second recommendation is UltraTech Cement. The stock is currently trading at 2,322 and we expect a target price of 3,180. Now there is an upside of around 33%. The company has a capacity of 62 million tons and the market share of 17% in the domestic cement industry. Third one is India Cements. The stock is currently trading at 103 and the target price is 146. The company derives around 85 to 90% of its revenue from South India. At the current market price 108, the stock is available at a large discount to its other mid-cap peers. Given the improving macroeconomic scenario, stable pricing and expected pickup in demand, we are positive on India Cements. Now I recommend Banco products. The stock is at 140 and their target price is 182. Banco is a manufacturer of radiator and gaskets that have application in automobiles, oil engine and compressors and locomotives. The company is a leading exporter of aftermarket radiators to Europe. With a growing presence in America, Middle Eastern and African market, this stock is likely to perform. United Bank, the current market price at 40 rupees, the target is 54. United Bank has almost corrected to 35% from its recent high of 61 rupees made on 4 July 2014. The stock is likely to find a strong support around 38. So we recommend accumulating this stock around 38.40 level for the target of rupees 54. The other stock is IndusInd Bank, which is trading at 661. The target we expect is 698. IndusInd Bank Limited, the stock is in continuous uptrend since last March 2014. The stock is likely to test 698 in the short term. We recommend initiating long position in the stock with a stop loss of rupees 578. Our other recommendation is Exide. Currently trading at 165 rupees, the target price we expect is 220, which is an upside of 29%. Now going ahead with expectation of strong pickup in the demand from the automotive segment and higher level of industrial activity leading to higher volume and therefore utilization levels. Exide's operating margin are likely to improve. Exide's financial performance is likely to remain on an uptrend with top line, bottom line growth of 17% and 30%. Our other pick is Ashok Leyland Limited, currently trading at 43 rupees within stop loss of 33 and a target of 54 rupees. Ashok Leyland Limited has given a bullish breakout at rupees 40 with decent volumes on monthly chart. The stock is expected to test rupees 54 in the near future. We recommend initiating long position in the stock with stop loss of rupees 33. Our last pick is Mahindra & Mahindra Finance, currently trading at 278. After making a recent high of 296 on 15 September 2014, Mahindra & Mahindra Finance corrected almost 8%, which gave us a good opportunity to buy. Now it is expected to get a strong support near 265. We recommend initiating long position in the stock with a stop loss of rupees 230 for the target price of rupees 340. Now I'll give you an overview on mutual funds. What exactly mutual funds are? Mutual fund is an investment vehicle that pools fund for many investors for investing in securities such as stocks, bond, money market instrument and similar assets. This month, investors pumped around rupees 30,500 crores into various mutual fund schemes, making the third consecutive month of inflows. As per the latest data available with Securities and Exchange Board of India, that's SEBI, investor put rupees 30,517 crore in mutual fund schemes last month. At gross level, mutual fund mobilized rupees 54.1 lakhs crore in September, while there were redemptions worth rupees 53.8 lakh crore as well. This resulted in net inflow of rupees 30,517 crores. Equity mutual fund outperformed Nifty by 10% since 1997. According to market analysts, investors have put in most of the money in equity mutual fund and equity linked savings schemes. Overall, during the current financial year so far from April to September, mutual fund on a net basis have mobilized over 3 lakh crores compared to 53,783 crores garnered in the entire 2013-14 fiscal. That's all for now. We keep you updated with the latest market happening. Keep on watching NNC News. Goodbye.